Well, joining us now is Vincent Reinhart, BNY Investments chief economist. He spent over 2 decades at the Fed. We also have David Zervos with us, chief market strategist at Jefferies and a CNBC contributor. Gentlemen, wonderful to have you here to break down what we heard from the Fed and Chair Powell this afternoon. David, I'm going to start with you. I want to get your reaction to Gundlach's reaction, especially given the fact that yesterday on CNBC, you suggested that you see things very differently right now in terms of where monetary policy should be headed.
Well, Morgan, I don't tend to like to talk about where I think things should be going. I like to talk about where I think they are going to be going. That's my more positive outlook rather than normative. But they ask me that question every 6 weeks about what I think I would do if I was in that position, and I give it to them. I do think there's a very cogent case for bringing policy back to neutral rather quickly. We had an incredibly volatile April, an unbelievably volatile April, where correlation patterns went out of whack to the tune of something we haven't seen in over 40 years, really, or at least in my market experiences. And I think there was a pretty significant change in inflation expectations in the break-even space that suggests people are looking at falls in inflation on a forward basis, one-off price increases that are then followed by weakness because of what might happen with tariffs. And I think there's lots of other supply side effects that are disinflationary that are lurking on the deregulatory side. So why we're at 100 to 150 basis points, maybe even more, above neutral and continuing to do QT escapes me a little bit.
Vincent, how do you see this moment right now? I'm reading your notes, and you say black smoke signals from Constitution and C Streets as well as the Vatican. What did we learn from Powell today, especially since it seems like there really weren't a lot of headlines?
Yeah, the bank presidents can go home. The cardinals have to stay locked in place, though. So the fact is, what we learned is if Chair Powell doesn't want to inform you about what they're going to do, then he won't inform you about what they're going to do. And the reason he didn't is he's not sure. As opposed to David, I understand the arguments, but there were a couple mights in David's characterization, and that's what Chair Powell emphasized. We might see changes in tariffs, and we might see expectations of inflation well anchored after the tariffs come into place, but they haven't happened yet. And they just don't want to jump off the diving board until they're sure there's water in the pool.
David, what do you think of the way President Trump is characterizing the trade deficit and the idea that it's okay to have perhaps an overall pause on trade with China, in contrast with anecdotally what we're starting to hear out of several small businesses saying they're running down their inventory right now. They've got maybe a month or two left, and then they can't afford to bring more over from China, and they might just go under with an impact throughout their customers and suppliers. How do you square those two?
John, I think it...
Sorry, that's for David Zervos.
Sorry. Oh, sure. I thought that was it. Thanks, John. A great question, and something I think that is still, you're going to divide a lot of economists and a lot of people who think about trade with those comments. I don't think, in principle, there's anything that an economist will say is bad about a trade deficit or a trade surplus. But I think what we're looking at is overall fair trade storyline that is trying to be rewritten from an unfair trade storyline. And that, I think, is something that does manifest itself very often in trade imbalances coming through the trade deficit. So while a trade deficit or surplus is not necessarily a good or a bad thing, it is associated with an imbalance. And the imbalance that we have today is $1.2 trillion, which this administration is trying to bring back to something more manageable and something that I think feeds gross domestic product in the United States in a more positive way. So there are a lot of salient truths to what the president is saying. But I think this idea that just trade deficits are bad is not something you want to lead with. Trade deficits themselves are a symptom of something that could be bad that we should fix. And I think that's where the policy should be.
And Vincent, I guess